Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Nvidia's three-day rout wipes off $430 billion, dragging Wall Street with it. Asian stocks shrugging off worries of the tech rally running out of steam. Secretary of State Antony Blinken and Israeli Defense Minister Yoav Gallant discuss a ceasefire deal in Washington. The U.S. seeks an end to the war and to prevent further escalation with Hezbollah in Lebanon. Plus, Ghana secures a debt deal with private creditors to restructure about $13 billion of loans. We discuss what this means for investors later this hour. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. We are going to, as ever, kick off the show taking a look at some of the market price action over the last 24 hours because we did actually get a pullback in tech stocks. Who would have thought? Right behind me, you can see the close for NASDAQ down more than 1.1%. And guess what? It was led by one stock, Nvidia, in focus this time for another reason. It actually was leading the declines yesterday, down almost 7% in yesterday's trade, down about 12% in the last 3 days. And the question that investors are asking is whether this is a minor correction or the beginning of a more bearish market price action from here onwards. So we're going to discuss that on the show with our guests. So something to bear in mind. The handover from the U.S., not so pretty. But then you can see that most of these markets in Asia have shrugged off the news, up more than 0.7%. But speaking of Nvidia, given the sell-off of the last couple of days, we've now broken through $3 trillion to the downside. So it's now got a market cap of $2.9 trillion. But let me also just illustrate to you what exactly happened in terms of positioning, because the next chart I'm going to show you is about how investors piled into the stock and pretty much the weekly inflows going into Nvidia were the largest weekly inflows the stock has seen just before this sell-off started. So we'll get there in a moment. But essentially what it's telling you is that positioning got a little bit stretched in that stock and is probably one of the reasons why investors took to started trimming some of those losses. So there you go. You can see that the bars at the bottom, those blue bars, are telling you about the extent of the inflows. The red bars at the top are telling you how much the stock sold off. So 12% in the last 3 days. But I did mention at the top that stock markets in Asia have pretty much shrugged off the news and the negativity coming from Nvidia. Avril Hong has more.
Now, we're seeing Asia stocks not doing that badly today, despite the sell-off in Nvidia. We are also seeing a recovery in currencies, including on the offshore yuan and the Japanese currency pulling away from the 160 level. Now, this is against the backdrop of a softer dollar, but also helping the Chinese currency is comments from the Chinese Premier Li Qiang speaking today, saying that he's confident that China can reach its 5% growth target this year. So we actually saw some gains against that backdrop. Now, for the yuan, also of consequence to watch where the yen hits because they've been closely related. So if we see the Japanese currency weakening further to say 170, which is where some traders see it, we could see further weakness on offshore yuan, and that could put pressure on onshore. Let's flip the board and take a look at what we're seeing in equities because, as you say, it shrugged off that performance in Nvidia. And part of the reason, I think, is this rotation out of growth and into value. The financial sector is among those that are performing well today. And make no mistake, though, some of these AI chip-related stocks are among the big drags on the Asia stock gauge today still. Jumana.
Yeah, so we're still getting that Nvidia effect in certain sectors. Avril, thank you so much. Well, the fate of Nvidia stock is the focal point of markets as it enters a correction. Investors turning to technical analysis to find a bottom. So this chart shows the next support level is around $115. And let's bring in our first guest who says the sharp correction in AI and semiconductor stocks is actually an opportunity. So joining us is Sunil Garg, a managing director and global head of research and investments at Lighthouse Canton. Good morning to you. So where do you stand on the debate? Is this just a minor correction for Nvidia or the beginning of a more bearish run for the stock looking ahead?
So, there's a lot of comparisons being drawn between Nvidia and what happened in the dot-com boom, especially with the likes of Cisco. And, at some point, there will be an end to this bullishness. But I do think that right now in the entire AI ecosystem, where you have visibility on sales and earnings, I think that is still the space to be. And irrespective of competition, I do think there are companies that are benefiting from this investment in capex. And to that extent, I do think this sell-off across the broad semiconductor space, AI-related names, is still an opportunity, because I do think the earnings visibility is very strong at this point in time.
What do you think the sharpness and the speed of the sell-off tells you about positioning? And again, just before you came on, we put up a chart showing that Nvidia had actually witnessed its highest weekly inflow into the stock before this major sell-off occurred a couple of days ago. So do you think that the fact that we've had such a sharp pullback is just a reflection of how frothy positioning is right now?
Absolutely. Look, I think, on our calculations, Nvidia's stock had overshot what we would say as a reasonable value for the company's stock. And so to that extent, you clearly see this where positioning increases. You also had a huge options expiry last Friday. So clearly there was a positioning element to it. And of course, you could argue whether it's profit taking or risk management. And I think this is a healthy correction. Now, this is a stock where it has seen a massive increase, not just on a year-to-date basis, but over the last 12, 13 months. And so from that perspective, I think you've got to put the decline in that context. Of course, it attracts the most attention, having briefly become the most valuable company by market cap. And so to that extent, it gathers a lot more attention. But we think, the earnings in the company, the trajectory, the opportunity is still there.
Yeah, I was reading a note out of Morgan Stanley Research yesterday, and they were saying that over a rolling 1-month time horizon, breadth in the market is as narrow as it's been going back to 1965. It's just a handful of stocks. We know that's driving the outperformance of these equity indices. So if you see the likes of Nvidia start pulling back, what does it mean for broader equities given the narrowness of this market?
Absolutely. Look, breadth has been, I would say, weak for a while. I think the much discussed Magnificent Seven have been driving this market. And, there was a period where if I go back to, let's say, about 3 weeks ago, you had literally Nvidia as a single stock outperforming even the Magnificent Seven, right? So there is a narrowness that does, obviously, if you see a large correction in some of the bigger names, that does cause a correction overall in the market. But our focus is always on not looking at the market in its totality, but looking at where are the growth opportunities. And if there are companies that are able to deliver on sales and earnings, which we think is the most important factor, that's where the opportunities are going to be. So to some extent, the reason why the market was driven narrowly was because these were the companies that have the visibility on earnings.
Yeah, and again, most of these stocks are growth stocks. So one question that I want to put to you is how you think the stronger dollar may affect the trajectory from here for some of these growth stocks, especially since so many of them derive their income from abroad. What does the stronger dollar do?
Look, unless we see a massive change in the currency, I think at this point in time, the top line trajectory is strong enough to offset that. I'm not, talking about a very substantial step change in currency values, which we don't think is a likely outcome. So to that extent, I think it's a little bit of a sideshow in terms of impacting earnings. The rate of growth that we're talking about, the growth companies, is far, far stronger than what the currency offset is going to be.
So then what other equity opportunities are you considering? I think you've articulated how you're thinking about U.S. equities pretty well. I see you're talking to us from India. We saw a bit of a shakeout post-elections, but of course it's fully recovered now. Is India a market that you like?
Yeah, amongst the emerging market space, that is really the one standout opportunity. And once again, I know you had an emerging market expert talking about on the show a short while ago. And our view is that you can't look at emerging markets in its entirety, but you have to look at where are the growth opportunities. And I think the clearest growth opportunity that you're seeing in the emerging market space is in India. And elections are something which have historically not had a huge role to play. They obviously have short-term impacts, but ultimately it's the underlying growth trajectory, which is what attracts us to the Indian market.
Yeah, and it's gone from strength to strength. After that initial sell-off post-election results, we're significantly higher. So it seems like you're not alone with that view. Sunil, thank you so much for joining us today on Horizon. Sunil Garg, Managing Director and Global Head of Research and Investments at Lighthouse Canton. And still ahead, Israel's defense minister is in Washington as the Biden administration tries to de-escalate tensions along Lebanon's border. We bring you the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. U.S. Secretary of State Antony Blinken and Israel's Defense Minister Yoav Gallant have held talks in Washington as the Biden administration works to prevent a war with Lebanon's Hezbollah. Blinken says it is crucial to avoid escalating the conflict in the Middle East and find a resolution that would allow both Israeli and Lebanese families to return to their homes. So to talk more about this, Bloomberg's Dubai Bureau Chief Adnoc joins us here in the studio. Let's just start with Gallant's trip to Washington. It comes at a time, we've spoken about this on the show, of increasing amount of fractiousness in that U.S.-Israel relationship. What is the purpose of Gallant's trip?
So these have become very regular visits, whether Blinken's visits to the Middle East or Israeli officials to the U.S. What's interesting here is that we're seeing the U.S. taking every opportunity to reaffirm and tell Israel not to open a second front with Lebanon on its northern border, fighting with Hezbollah, of course. And we saw, and despite these conflicting reports we've been seeing, and we've been talking about whether the U.S. would give the green light to Israel to go ahead with that or not, we saw a top U.S. military official yesterday saying that it is important that Israel doesn't open the second front because it would likely draw in Iran.
Yeah.
And the U.S. might not even be able to help Israel because of Hezbollah's short-range missiles. Yeah. Now, we remember the long-range missiles that Iran fired, and, of course, the U.S. and the U.K. helped, and that was they were able to help because of the defense systems.
Yeah.
But with Hezbollah's proximity to the border, short-range missiles, it might be even more difficult for others.
And crucially, the precision-guided missiles as well. The Hezbollah, it's a totally different ballgame with Hezbollah. As we know. You know, one thing, Dana, that I thought was really interesting out of Netanyahu's interview is, well, two things. He obviously did mention that he's looking to lower the intensity of the fight in Gaza, potential redeployment in the north. But then he also said he would actually be open to a diplomatic solution. That came up in the interview. Was that not notable, in your view?
It was very notable, and I think the interview, his first, right, for local media, I think it was very worrying because there was no reducing any kind of tensions here. So he was saying he won't agree to a partial, he would only agree to a partial ceasefire, and he would be ready to open a second front, saying Israel is prepared to fight on multiple fronts. And this was kind of worrying for probably the U.S. and the region as a whole because, like we've been saying on the show, a war with Lebanon will really engulf the entire region. This is not going to be just another front like the Gaza war. This is Hezbollah, one of the world's most equipped and armed militias, with the backing of Iran. And like we've been saying also, that Hezbollah is Iran's crown jewel.
Yeah.
It would be very hard for Iran to see it not exist anymore.
Yeah. Okay, well, a conversation to be continued. Dana, thank you so much for coming on the show. Bloomberg's Dubai chief, Adnoc-Covestro. Now, moving on, the World Economic Forum's second biggest meeting of the year is underway in the Chinese city of Dalian. The Chinese Premier Li Qiang delivering the opening speech at the 15th annual meeting of what's dubbed the Summer Davos. Our chief North Asia correspondent, Stephen Engel, joins us live from Dalian. Stephen, maybe just give us the highlights of the Premier's speech.
Well, Li Qiang struck a positive and open sentiment and tone in his speech here, opening up the three-day Summer Davos, as you rightfully said. It's the annual meeting of new champions. It's been held 15 years, except for 3 years during the pandemic. And it does bring, together academics and government officials, business leaders, and the like to kind of discuss the global issues from the perspective of being in China. And the Premier Li Qiang traditionally traditionally gives the speech, and he was, saying we're open for business, but he did address some serious challenges. He warned of negative consequences for the world if the global economy decouples. He didn't mention the United States by name, but clearly there were some veiled references to U.S. policy. He says it will drag the world into a destructive spiral where the fierce competition for a larger slice of the pie will end up with a diminished pie. He also mounted a defense against Western claims of Chinese industrial overcapacity and allegations of Chinese dumping of cheaper goods on markets like Europe and the United States. He essentially says the pursuit of new technologies should not be a zero-sum game. Now, meanwhile, of course, he also, expressed confidence in the domestic economy, saying he is confident that the steps that have been put in place to put a floor on this sluggishness in this domestic economy will lead to them reaching their goal of around 5% GDP growth this year.
Stephen, I think it's also notable that many economic blocs just in the last couple of weeks have talked about imposing tariffs on electric vehicles. And yesterday we were speaking to one of our colleagues about the trip that German officials are making to Beijing now to sort of hammer out a potential deal on these tariffs and potentially abandoning them if they come to an agreement. What are we hearing on that front, on the EV front specifically?
Yeah, I mean, obviously this has become a new front on the trade friction between the East and the West. The Biden administration has raised its tariffs on Chinese imports of EVs to the United States, exports to the United States, upwards of 100%. Canada, now we're hearing, is likely to be in line with the U.S. policy, potentially increasing its tariffs. Europe has already outlined an increase to 48% for Chinese EVs. Now, that would take effect in July, so there's some negotiations going on. The Vice Chancellor of Germany, obviously in de facto representing the auto industry of Germany, was here. Robert Habeck, essentially saying that they've been able to secure some negotiations with the Chinese. Also, the Trade Minister of the EU has had weekend-long talks over a video conference with his counterparts here in China to try and find a negotiated way to alleviate the damage. Obviously, Germany's number one product it sells to China are automobiles, and there's been talk of about a 25% increase in some of these tariffs on larger engine German cars or European cars to China. So that is something, obviously, the German government officials are trying to avoid, if not mitigate, and China has signaled that they would potentially be open to some alleviation of the existing tariffs on those larger engine German cars if Berlin is able to convince the European Commission and the European Union as a whole to not impose those 48% tariffs across the board on EVs from China.
Interesting. Well, definitely keeping a close eye on it, and it has bearings on the German economy as well, given the size of the automaker industry there. Stephen Engel, our chief North Asia correspondent, live from Dalian in China. Well, coming up, Saudi Arabia's vision to encourage more religious pilgrims is coming under threat. We discuss the deadly heat wave impacting Hajj next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, Saudi Arabia's bid to boost the number of religious pilgrims it welcomes each year is coming under threat. That is after more than 1,300 worshippers died in extreme heat during this month's Hajj pilgrimage. This year has been unseasonably warm, with temperatures rising to a 20-year high, according to the Saudi National Weather Center. Now, joining us now is our Saudi Bureau Chief, Christine Burke. Christine, 1,300 deaths. It is a really high number. I know that many of them, hundreds of them, also came from Egypt. First of all, just walk us through what Saudi Arabia has officially said about the fatalities and their response to the situation.
Well, good morning, Jumana. It's good to see you. So let me first just say that it took Saudi Arabia more than 2 full days to issue an official statement on these fatalities. So it's really good that we've now heard directly from the kingdom about what exactly it thinks happened or what exactly did happen. So Saudi Arabia said specifically that 1,301 pilgrims died during Hajj, and it noted that many of those deaths came to heat stroke, or rather due to heat stroke. It also noted that more than 80% of the fatalities came from unauthorized pilgrims. Essentially, these were pilgrims that flew into Saudi Arabia without a proper permit to perform Hajj and then spent hours walking in the direct sunlight without access to proper shelter or to the proper medical attention that they may have needed. Now, I do want to note that Saudi Arabia does undertake a lot of measures to try to prevent pilgrims from coming into the country and performing Hajj illegally. It has also done a lot in recent years to try to combat the rising heat levels. It has, for example, set up 100,000 air-conditioned tents around holy sites. But clearly, as we have seen this week, Saudi Arabia perhaps it did struggle to deal with these massive flows of pilgrims and with this unprecedented heat. So it's clear that it's probably going to need to do more in the future if it wants to handle more pilgrims.
Chrissy, we're just putting up a headline there saying that more than 1.8 million pilgrims attempted Hajj this year. And I thought it's interesting because as part of Saudi 2030, I know they're looking to target 30 million foreign worshippers a year by 2030. So what is all the incidents this year? What sort of bearing is that going to have on the Crown Prince's ambitions?
Well, at the end of the day, Jumana, I think it just will make things a bit more complicated and a lot more costly for Saudi Arabia. So as you said, the kingdom's goal is to be able to handle or have the capacity to handle 30 million foreign pilgrims by the year of 2030. That's more than double the amount of pilgrims that we believe came into Saudi Arabia from abroad last year. So clearly, if Saudi Arabia has struggled already to manage the situation that we just witnessed here with far fewer pilgrims than it wants to bring in, then it is going to need to do more. And that's obviously going to lead to more spending. It's going to need to set up more facilities like those air-conditioned tents. It's going to make sure that there is more adequate access to healthcare in the future. And this is something that's going to be costly. It needs to be said, though, that Hajj is quite lucrative for Saudi Arabia. So you can bet that the country will do whatever it needs to do to ensure that the situation that we witnessed this year doesn't hinder its ambitions to grow that pilgrim target to 30 million by 2030. Future Market Insights notes that Saudi Arabia probably brought in about $170 billion this year alone from Hajj, and it sees that growing to almost $350 billion in the next 10 years.
Christine, thank you so much for the overview. All right, we are heading to a break. When we come back, we're going to be talking about oil. Stay with us. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Nvidia's 3-day rout wipes off $430 billion, dragging Wall Street with it. Asian stocks shrugging off worries of the tech rally running out of steam. Secretary of State Antony Blinken and Israeli Defense Minister Yoav Gallant discuss a ceasefire deal in Washington. The U.S. seeks an end to the war and to prevent further escalation with Hezbollah in Lebanon. Plus, Ghana secures a debt deal with private creditors to restructure about $13 billion of loans. We discuss what this means for investors later this hour. Well, it's just gone 8:30 a.m. Across the Emirates, I'm Jumana Bersachi in Dubai, picking you up with some of the market price action. A sell-off in stocks yesterday, led by the tech sector. Nasdaq closing down more than 1.1% lower on the session, pulled down by Nvidia. I'll get to that in a moment, but the stock was down almost 7% yesterday in trading. Asia Pacific, though, shrugging off some of those concerns. A lot of green on the board today, up 0.7% as we walk into the European Open. 10-year yield sitting around 4.2%. We've been in that tight range. Obviously, we rallied about 20 basis points after that lower than expected CPI print about 10 days ago. And then Brent seeing a bit of life. We have been slowly inching up higher over the course of the last few weeks, sitting at $86 now. Remember, post OPEC Plus, we broke through $80 to the downside. And since then, we have recuperated a lot of those losses. But let's talk more about Nvidia, because the stock has now broken through its $3 trillion market cap, but this time to the downside. 3-day sell-off. The stock is down more than 12% over the course of the last 3 days. So now we're sitting at around $2.96 trillion market cap. So remember, last week it briefly overtook Microsoft. It is now back to being the second largest company in the world, but namely on back of positioning. So let's just flip the chart really quickly. Let me show you. Just in the week up to this sell-off, we saw a massive amount of money coming into the stock, buying into the stock, huge weekly inflow, perhaps explains some of the price action that we saw yesterday and why the correction has been so sharp. All right, let's talk more about oil, though, because I did mention that it has been holding up, and it is holding on to marginal gain as traders weigh the potential fallout from simmering geopolitical tensions, including Houthi attacks on the Red Sea and upcoming elections in Iran and France, though unclear why the French elections would impact oil, but still something on our radar. Our next guest sees Brent falling to around $76 next year. So for more, Simon Williams, the CEEMEA chief economist at HSBC, joins me here in the studio. Let's just pick up on the price action in oil. A bit of life coming back into the oil market again after OPEC+. How do you see the price action in the last few weeks?
We're reasonably relaxed about that oil price. I'm the economist. I make the long-term forecast for this part of the world. We need a stable oil price assumption, and we've been running with a base case that oil averages around $80 a barrel this year and into next year as well. I think what we're trying to get to there is the idea that oil is range-bound. 70 when the world feels bad, 90 when the world feels good, and 80 as a midpoint there, which deals with the region's fiscal and external account needs very comfortably.
Yeah, so your oil team have $80 a barrel penciled in for the second half of this year, below where we are right now. They've got $76.5 to be precise, in 2025. Ultimately, they see supply over outpacing demand. But because you're an economist, what does an oil price of around $75 mean for the region? Is it something to start worrying about, or is it manageable?
No, I think it's fine. And again, $80, which runs through our forecast, is a comfortable number for pretty much all of the GCC economies. Public finances are reasonably strong. Current account position is particularly strong. It's the kind of number, I think, which helps to support sentiment amongst policymakers and amongst the corporate sector as well. For me to get worried, I need to see an oil price that's settled below 70, 6 handle on the oil price. At that point, I think you start to see some more difficult questions being asked about that macro outlook. But for now, no, I'm relaxed about the oil price assumption.
So give us a sense of just how activity is going in the region. I know we just had a recent batch of PMI numbers. It seems like the momentum is still there with Saudi. Qatar also had positive momentum month to month. How does that square up versus other countries in the GCC?
I think it's looking pretty good. We've started to get the first quarter GDP numbers coming through. Saudi and Oman both printed their numbers for Q1, and they were positive, reasonably strong nominal growth, maybe a little bit of loss momentum in the kingdom, and the underlying drivers are still there. And yes, those high-frequency indicators give us every sense that momentum has continued into Q2 as well.
Well, let's pick up on those Saudi GDP numbers, because the overall number, I guess, masks the difference that we're seeing in the oil output versus the non-oil output. Obviously, with their push to diversify the economy, they will tell you that they're focused more on that non-oil GDP number. But that, at the end of the day, is still very much so a hydrocarbon economy. So how much of a weight do you give the breakdown between oil versus non-oil?
The headline number can be terribly misleading. It can rise and fall depending on what's happened with OPEC production. What I care about, what I'm trying to understand what's happening with the underlying economy, the kind of economy that households experience, the corporates experience, investors experience. That's oil, all about the non-oil economy. And there we've got growth running around sort of 3.5% and 4.5% over the first quarter of this year, the kind of level we expect to persist over the rest of this year as well.
Do you see the geopolitical tensions in the region impacting any of these economies materially?
We're all very aware, obviously, what's happening in the broader region, but I look at economic performance, look at market performance, as well as a sense that the markets are looking through what's taking place. It's a very rich region. It's able to cope with the kind of shocks that a further deterioration of the geopolitics might bring. And when I look at underlying economic performance, look at what's happening with the markets, look at what's happening with investment, look at the sentiment indicators that we see, tourism numbers as well. So far, they're holding up really well.
One area where it's not holding up is FDI, though. You're not seeing that coveted FDI come into Saudi Arabia, which is what the Crown Prince wanted to see.
I don't think that's a reflection of the geopolitics. I don't think it's an even story across the region either. Certainly, if you look at the numbers for the UAE, those FDI numbers are really really strong. And again, a sense that for long-term investment, there's an ability to look through some of those near-term risks.
Let me ask you about Egypt before we go, because there has been a lot going on in the Egyptian economy. They secured that investment from UAE. They've come to an agreement with the IMF. Are you seeing a turnaround in terms of how the economy is reacting to the securement of those agreements?
I don't think I'll talk about a turnaround yet. I think it's too soon to be talking about recovery, but I do see in the data some very strong signs that the economy is stabilising. The currency has held that kind of 45-50 level pretty well. I look at the external account data. I can see a big improvement in the net foreign asset position. Central bank reserves are now at the highest level ever. Inflation is high, but it's starting to trend down. There's a bit of fiscal room for manoeuvre there as well. So, yes, I do sense that there is stabilisation taking place in Egypt, but I think we're going to be having to wait a while before we can start talking about a return to growth.
OK, fair enough. That's a good place to leave it. Simon, thank you so much for joining us on the show. Simon Williams, CEEMEA Chief Economist at HSBC. Now for some M&A news. Covestro shares surged after revealing it's entering formal talks with suitor Adnoc on a takeover that could value the chemical company at around 12 billion euros. The German firm said that the Middle East energy giant is considering a final higher offer of 62 euros per share. Let's bring in our Middle East energy markets reporter, Antony de Paula, for more. Well, this isn't the first time that Adnoc has made a bid for Covestro. They've upped the offer to 62 euros. Where do things stand?
Yeah, they started off at about 55 euros a share. That wasn't deemed as sufficient, so they've gradually come up. They're at 60 right now. And Covestro has granted Adnoc a chance to look more closely at the books and due diligence, with the indication from Adnoc that they will go to 62 if that's borne out by the due diligence. So we've still got some period where Adnoc is going to take a closer look at Covestro, but so far they've exhibited the fact that they want the company. They've increased that bid. They've stayed in contact. It's been about a year that they've been in talks with Covestro, and we've had some quiet periods from the German company without them really saying anything before we did kind of get this turning point yesterday when Covestro did bring Adnoc in and allow them to get a closer look at that company.
It's funny because before I moved to the Middle East, I was covering the story from the perspective of the German chemical giant. And, you know, back in COVID, we were all talking about how many of these German industrial companies, the chemicals companies, were struggling due to the shock in energy prices, which obviously made it an attractive buy for Adnoc. But things have recovered since then. So what does that mean for how much Covestro are going to be able to push back on the offer that Adnoc are making now? They're in a better position than they were a few years ago.
Yeah, so there's kind of two issues there. The fact, as you mentioned, in COVID, there was the energy price increase, plus we had the Russian invasion of Ukraine, which cut off gas into largely energy supplies into Europe, cut off that Russian pipeline gas. So that's also been a big issue for those European suppliers. Challenging also with a lot of Chinese supply. So it's a big issue there in terms of cost and markets. But energy assets have been more highly valued. With that increase in those prices, some of those prices have gone up. So some of the valuations are a little bit higher there. But Adnoc is counting on that as a way to diversify its income away from just crude oil sales, get more into that petrochemical area where it already has some presence in production from the Middle East, and they want to increase that to a more global presence.
Yeah, it makes sense. Antony, thank you for the overview. Our Middle East energy markets reporter, Antony de Paula. Now for a look at some of the other stories we're following this morning as well. Dubai is set to invest $8.2 billion to develop a drainage network following those record rains in April, which brought the city to a standstill. The heaviest downpour in the UAE since records began in 1949 revealed weakness in Dubai's infrastructure and showed how unprepared it is for freak weather events. The project is set for completion by 2033 and will increase the capacity of rainwater drainage in the Emirates eightfold. And former Millennium co-CIO Bobby Jain is said to have secured cash from Abu Dhabi's investment authority for his new multi-strategy hedge fund. Jain Global is set to start trading on July the 1st and has gathered $5.3 billion in commitments. It will be the biggest launch since Exodus Point's $8 billion launch in 2018. And also coming up, Ghana is now a step closer to completing its debt overhaul, reaching a deal with bondholders to restructure $13 billion of its international debt. The details next. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Now, Ghana has reached an agreement in principle with Eurobond investors to restructure about $13 billion of its debt. The deal will see an increase in the haircut rate to 37% from 33%. The West African nation unilaterally suspended payments on external loans in 2022 and embarked on a debt overhaul to fulfill conditions for a $3 billion IMF program. For more, Bloomberg's Africa correspondent Jennifer Sabazaja joins me from London today, all around the world. Jen, what details do we have on this deal?
Yeah, Jumana, this is an important step for Ghana and really for international bondholders, especially in the African region. So as you mentioned, of course, this was a deal reached by the Eurobond holders, and we know that that includes Aberdeen, Neuberger Berman, and also Greylock Capital Management. And what we heard is that, yes, they are planning to take this haircut that's almost 40% off face value of these bonds. But this is an important step in Ghana. This is an important step for Ghana in terms of figuring out and resolving many of their debt issues that they've been struggling with. We had seen earlier this year the holdup between the official creditor committee and international bondholders because there wasn't an agreement about the comparability of treatment. Now that we do have this step in investors agreeing to this and taking this haircut, this begins the process of Ghana then resolving their debt potentially by the end of the year. And then we get started again with the discussion with the official creditor committee, which is an important group of investors in order to resolve Ghana's debt issues.
Yeah, well, I was going to say this isn't the end of it, right? So what happens next as part of these negotiations? What's the next step?
Right. It's important, Jumana, as you mentioned, because we've seen Ghana and Zambia go through similar treatments, but there has been several snags that have been happening along the way, especially when it comes to Ghana. Now, the official creditor committee, which is the majority of bondholders for Ghana, are going to meet and discuss really what happens next and how they plan to then address their own issues with the bond. So we heard from them on Monday after we got this initial news, and we heard them say that it's a good basis for consultation of the official creditor committee members in order to provide promptly the collective assessment of the official creditor committee regarding the comparability of treatment. In other words, and now they will go to the table and discuss what happens next. We're also going to wait to hear from the IMF because this was an important step in order for Ghana to unlock the deal with the IMF in order to resolve their debt issues. We're going to wait to hear from the IMF later this week to see where they stand in terms of how this gets Ghana closer to some of the terms of the IMF's deal, and really then how does that unlock the $3 billion that Ghana is waiting anxiously for.
Yeah, and ultimately what it means for debt sustainability. Bloomberg's Jennifer Zabazaja, live from London. Thank you. Well, staying on this story and joining us now from London as well is Simon Quijano-Evans, chief economist at Gemcorp Capital. Simon, good morning to you. I've been tracking a lot of these Africa debt restructuring stories, and I think it is notable that Ghana finally came to an agreement. Some of the Eurobond holders yesterday, I should say, a couple of weeks ago, we had a similar breakthrough for Zambia. But all of this, of course, was through that G20 common framework, finally beginning to see some fruits from the framework.
Yes, good morning. No, absolutely. Finally is the best word, probably. I mean, Zambia's taken about 3 years since they started the whole process. Ghana's taken about 2 years. But frankly, as you were discussing before, it's so complex, the whole issue and the whole process. And bondholders are not included in the whole common framework process from the beginning. So at the end of the day, they're presented with a fait accompli by the official creditors, this OCC, and then they have to get this AIP, which is the agreement in principle where they are now. And then they have to get this whole thing about the comparability of treatment. So in my opinion, a lot of people's opinions who follow this closely, is very complex, and you have to really understand what's going on. It could have been done much quicker.
Yeah, I mean, the issue is that you just have so many different stakeholders. You have lots of differences of opinions. You've got China, who view debt restructuring process perhaps differently or at odds with some of the Western countries like the US and France. Do you think that coming out of this process for these high-profile restructurings of African nations, the process is going to move to being more streamlined? Is there anything that these creditors will have gleaned from the process?
One really would hope so, and I'm trying to be positive here, but I have my doubts. I think what we need to see is private bondholders, private commercial lenders, and the official creditors coming together and trying to find a streamlined solution, as you call it, for future restructuring processes. So if the Fed is going to start cutting rates, which I would assume so this year, then things start to get a bit easier for emerging markets and especially sub-Saharan African borrowers. But at the moment, there is really no private capital coming to these countries. And these countries desperately need private capital, especially like Zambia.
Yeah, well, you say that, but then I thought it was interesting in your research report, you talk about the outperformance of sub-Saharan African dollar bonds versus peers over the last 2 years. How has that happened with the restructuring deals for some sub-Saharan African nations going on in the background?
No, it's a very good question. But if you have in the MB, the JP Morgan MB Global Diversified Index, if you have about 70 plus countries and sub-Saharan Africans delivering 12 to 13% yields, not any longer, but they were last year and the year before, then you take the risk and expose yourself, because after all, these countries are not a huge amount of the index themselves. So all investors are prepared to take that risk. And if you do, then you hold on to these bonds and you can make some return as these whole restructuring process continue. But as countries like Kenya do very well, or Ivory Coast, or Senegal, Cameroon. So there are many, many countries up in sub-Saharan Africa really doing actually quite well.
I'm going to push on through despite the few pauses that we're getting in the Zoom. Simon, let me just broaden this out. Broadly speaking, looking about the trajectory going forwards for some of these EM bond spreads, we talk about the Fed, the beginning of their cutting cycle. It's obviously got pushed back, pushed further. Now they're indicating only 2 rate cuts by the end of this year. What does that mean for the EM complex as a whole?
So this is very important for EM US dollar bonds in particular, because everybody is waiting for the Fed to finally cut those rates. I expect more than the market expects this year because of what's going on in the labor market, the US, etc. Real interest rates in the US and the Eurozone are way too high, and in the Bank of England's real interest rates are way too high. So once we start to see the Fed cut, then we'll start to see probably inflows coming into the asset class. Will be a strong positive. But until now, we've only seen about 10 basis points spread widening this year in the MBGD, which is great news. Normally, if US Treasury deals had been so volatile in the past, then we wouldn't have definitely not have seen spread tightening. So I think this is good news, and it's very good news that the asset class as a whole is holding up so well.
Yeah, a lot of resilience in that market. Simon, I'm going to leave it there. Thank you so much for joining us today on the show. Simon Quijano-Evans, Chief Economist at Gemcorp Capital. Now for a look at some of the other stories we're following. WikiLeaks founder Julian Assange has been freed after 5 years in a British prison as part of a plea deal with the US. Sources say he will plead guilty to leaking national security secrets and be sentenced to time already served in the UK, allowing him to return to his native Australia. The US has pursued Assange since his website published thousands of leaked military documents in 2010, including video of a deadly attack in Iraq on civilians and journalists. And President Biden will seek to quell mounting attacks over his age when he debates Donald Trump on Thursday. The 81-year-old is said to be ready to go on the offense against his 78-year-old opponent, focusing on abortion, the January 6 U.S. Capitol attacks, and tax cuts for the wealthy. Biden has faced increasing pressure from Republicans and conservative media, which have amplified video clips raising doubts over his fitness and acuity. And the Fed is said to have shown other U.S. regulators possible changes to its bank capital overhaul that would significantly lighten the load on Wall Street lenders. Bloomberg sources say the revisions could lead to a 5% increase in the capital cushion that large banks need to hold. That's down from about 16% in the original plan, which faced resistance from lenders and some officials. And plenty more ahead. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now for a look at some of the other stories we're following this morning. Airbus has cut its earnings and aircraft delivery goals for the year in a surprise announcement after European markets closed on Monday. The aircraft maker is battling supply chain issues, depriving it of vital components at a time when demand for its jets is at a record. Now, the company now expects to hand over 770 aircraft this year, down from 800. And Uber has begun locking New York City drivers out of its app during low demand periods, and Lyft is now threatening to do the same. The lockouts are in response to a 6-year-old pay rule in New York, which requires the rideshare companies to pay drivers for the idle time they rack up between fares. Some drivers are complaining their wages have fallen by as much as 50%, and the lockouts are unpredictable. And that is it for our show today. This was Horizons Middle East and Africa. I'm Jumana Bersachi. Daybreak Europe is coming up ahead.